So we always, when you see this JORC 4311, it just means that we comply to both stock exchange. We have about 500 million tons of resources, and we're actively pursuing a bigger land position to try and get more resources. We came out with a mining study about a month ago, 4 million tons per year, with some attractive economics. The big thing is that thermal coal is very different from coking coal. In a coking coal world, where prices are around double what they are for thermal coal, you can have a smaller mine. Grant Cache has been operating pretty successfully, doing maybe about 1.2, 1.3 million. What's your tonnage, Terry?
2 million.
2 million tons. You can compete in the world with that kind of tonnage. In the thermal business, it's very different. You need to be big. In order to compete, you need to be big and low cost. Our study that we did was about 4 million tons per year. Realistically, we would like to make that bigger. And the only way you get bigger is you have to access more resources. So the way you access more resources is you keep picking up as much land position and developing your resources through drilling. And that's the process that we're doing. So, just to give you a little bit of history, those gentlemen from Australia, they had a good idea. They picked up some assets in 2008. They bought those assets from a gentleman who I just met. He lives in Toronto. He's in his late 80s, and he's held on to those assets for almost 40 years. And he got to a point whereby he wanted to monetize his properties, so he sold these to some of our company members in Perth. And what we've done since then, we've picked up this asset in the beginning of 2009. Those were Crown leases. In Alberta, you can apply for Crown leases by bidding on them. And we picked these up at the beginning of 2009. And this area in red, this huge area, we picked up. They were Crown leases, and we picked those up in December of 2009. So we've been adding a lot of territory to our company, and our 4 million ton a year plan that we talked about a month ago is only based on this area here. And this is the area we've been focusing on because that's the area that had the most work done on it. It actually had a feasibility done on it in 1982. And I'm going to be talking about 1982 a lot because 1982 was the last time that anybody looked seriously at thermal coal for export in Alberta or British Columbia. Those projects, a lot of those projects were worked on at that time. Some of them were even permitted. And what happened is there was a spike in prices, and then the markets fell away, and nobody really looked at thermal coal for export. And the last mine that got built in Alberta, were actually really basically Canada, a large mine for export, thermal coal mine, was Obed. And that was 1982, almost 30 years ago. So what we're doing right now is we picked up all of these assets, and you can see there's been some historical drilling done on these assets. We bought those off the government, and then we found a feasibility study in a warehouse in Edmonton that dates back to a project, some of you folks that have been in Hinton for a long time. I was working at Quintet in the early 1980s, and there was a sister project to the Quintet project. It was owned by Denison Mines. This was part of a much larger project called Denther. I don't know if anybody remembers that project, but they took it to feasibility and did a feasibility on it in 1982 as well. So Esso did a feasibility on this one, Denther did a feasibility on this one. 1983, the markets died for thermal coal, and everybody lost interest in these. These assets here were actually held. They were bought by Luscar. Luscar bought them from Denison, and then in 1992 they let them lapse. And they've been sitting there, and we picked them up in December. And so what it's done, it's given us access to more coal reserves. You can see this is the coal formation here and here. And so what we're trying to do is we're trying to put together a really big landmass, because as I told you, the bigger you are in the thermal business, the more chance of success. So what we've been working on, and again, I just re-emphasize, I joined in August, that's what, 6-7 months ago. We really are just starting on this project, because when I joined, the first thing we did, we went out and tried to raise some money. We went around, pretty well around the world, and raised $2 million. We put together a budget for $10 million for this year. A couple of months later, we went around the world, we raised $8 million. And so with that $10 million, we're presently working off of that, and that's enough to keep us going this year and do all our projects. The reason we want to list on Toronto, because it will give us access to more capital. And in this business, you need capital to survive. We need to do a lot more work over the next several years, so we need access to money. Right now, and I'm just telling you, we are operating pretty successfully on what we raised, and we still have $7.5 million in the bank, and we are going to be raising more money to push the project forward. So we put together this plan here on our projects that has us mining about 4 million tons a year. The way we did it is we actually knew what we needed to come in at for an operating cost, and we worked backwards. A $50 US operating cost for thermal coal is pretty attractive. What's happened to give us a window of opportunity really to develop this project, what's happened is that the same thing that's happened in coking coal, where markets have suddenly started to boom and prices have started to spike. Same thing has happened in thermal coal. Last November, October, November, thermal coal, Newcastle quality. We base ourselves against Australian Newcastle pricing, because they are sort of like the benchmark for thermal coal in Asia. That quality of coal was trading at $67 US. Today, that same quality is trading at $95 US. So there's a real good window of opportunity to move ahead with a thermal coal project. The other reason why the Hinton project is attractive is because a lot of the thermal coal users in Asia were relying on Indonesia and Australia exclusively, and what's happened is they like to spread out their supply, and they like to bring on another Canadian coal producer for thermal coal. Sherritt, Luskar have been producing the same type of quality of coal into Japan and Korea since 1978. So it's not a new product that we're introducing. It's the same quality of coal, and it's been able to sell coal into Asia for 30 years. They are producing about 4 million tons of coal out of the Coal Valley mine, and another 1 million tons is planned to be produced out of Waugh. So they've been shipping this coal for quite a while. So what we've been doing is we've been adding land. We have about 25,000 hectares, which is large land position, and what we're doing right now is we just completed one drill program to reaffirm the quality of the coal, and we are going to probably kick off here within another couple of months another drilling program, a much larger drilling program. So we're going to be pretty active in the community with what we're doing. And the other thing that we've been trying to do is going out and telling the world about, the coal world anyway, about the obvious assets that you have here in Hinton, with the fact that it's got such a history in coal, and the fact that it has, access to this great infrastructure. Because that infrastructure story is a big one when you go and talk to people that are about to spend billions of dollars for infrastructure.